Hello and thank you for joining me today. My name is Wesley Boudreau, one of the financial advisors here at the Retirement Group. Today I'm going to give you a really quick interest rate update on the Chevron pension lump sum calculations and how those interest rates are skyrocketing thanks to the inflation we've seen over the past couple months or so. Before I get started, I just want to remind everybody again, the Retirement Group, we do a lot of work with Chevron. However, we are not employed by nor affiliated with them. A quick reminder as to how the interest rates work and what that effect is going to have on your lump sum calculation. Chevron has a classic defined benefit plan, in which case there's a formula that's used to determine what your single life annuity is going to be. From there, if you want to deviate and have a joint survivor annuity or a period certain, you can add those. Or if you want to take a lump sum and turn around and try and invest those proceeds yourself to try and outpace or earn more income than what you could through the annuity. Or maybe you want to make sure your beneficiaries are more protected as well. So what they do is they actually look at the current interest rates. They look at what your age is and longevity and back into that to figure out how much they have to give you for you to essentially go out there and recreate that annuity or that income stream on your own. So when interest rates are lower, they have to give you more money to go out and try and duplicate that. Think about it like a mortgage. When interest rates are higher, which they're moving up quite rapidly right now, they don't have to give you quite as much. So because of that, we're seeing some of the quickest changes we've ever seen in the Chevron pension lump sum history just from month to month. Now, we actually took advantage of the one benefit of the pandemic, if you would, over the last 2 years, was interest rates came down quite dramatically, which increased lump sums. Now the flip side is happening; those interest rates are moving up quite dramatically, and so those lump sums are changing. So if you were thinking about retiring here the next year or so, it's really important to give us a call to run these numbers and see how it's affecting you, because if they continue on this trend, you could effectively be working for free if you stay on for a year or so. So how do they actually use those interest rates? They use what are 3 different Pension Protection Act segment rates: the first, second, and third. The first segment is going to correlate to the first 5 years retirement, second segment for years 6 through 20, and the third segment for years 21 and beyond. So for most of us, that second segment being 15 years long is going to have the highest weighting. So let's take a quick look at these interest rates, show you where they are. So what Chevron does, they use the previous 3rd, 4th, and 5th month average to determine what your interest rate is going to be for that current month. So we just got out the April rates, which was a skyrocketing jump from, let's look at that second segment, from 3.71 to 4.22% from March to April. And if we see before that, it was lower in February as well. So those rates are jumping up quite a bit. In bold below, we have the interest rates you're going to see for the next few months. Right now in May, we've got 3.03% as the second segment. In June, it goes up to 3.36%. And in July, jumps up to 3.76%. If you look down a couple lines lower, back in March, it was 2.76%. So this is actually showing you that we've had about a 1% increase from March up to July. And if we look at right now from May, we're going to have about 73 basis points. Generally speaking, a 1% change is going to equal about a 10% change in your lump sum. So that move just from March to July means you could be losing about 10% of your lump sum. So if you had a $500,000 lump sum, it's dropping by 50. If you had $1 million lump sum, it's dropping by $100,000. So that's why I said before, if you're thinking about retiring in the near future, it may be beneficial to look at these rates, because you could lose $100,000 and make $100,000. You make $100,000 income and lose it in the pension lump sum if you're going that route. So it's really important to take a look at this and run those numbers. And if we look at the bottom, just for reference sake, we can show you where they bottomed out at about 2.26%, back in December 2020. And it wasn't that long ago, they were up at 4.39%. So it's not far-fetched to think that we could see this go up a little bit higher as well as the trends continue. As I mentioned, the best way to actually run that is by running a cash flow analysis. Just give us a call and we can spend a couple moments with you gathering some data, and we can put together that detailed financial plan to show you the different options of the different retirement dates, the pension as a lump sum versus an annuity, how it looks not just now, but how it looks in 10, 20, 30 years down the road as well. But ultimately speaking, that's just a quick update on interest rates. Again, if you're thinking about retiring in the next year or maybe even 2 or 3 years, give us a call to run these numbers to see how they're affecting you. You can reach us at 1-800-900-5867, or you can reach us at info@theretirementgroup.com. And if you got a cell phone, you can go ahead and pull that up and hold it up to the screen, and you can either follow us on LinkedIn, specifically with the Chevron page, so we keep you updated on these rates and how they change monthly, and any other Chevron updates we have as they come out. Or if you'd like to schedule an appointment with myself or any of the other advisors in the retirement group offices, there's a scheduling button on there as well. You can hold it up to that. So again, I just want to remind everybody, these interest rates have moved quite dramatically, so it is having a major impact on your lump sum calculation if you're thinking about going that route. If you're not thinking about the lump sum and just looking at the annuity, it's not going to have an effect on it. And again, keep in mind, we do a lot of work with Chevron, but we're not employed by nor endorsed by them. But should you have any questions on this and want to review it, just give us a call at 1-800-900-5867. Thank you very much, and I hope you have a great day.